Hello, this is Steve Schwartz from Market Traders University coming to you on July 15th, 2009. The stock market is 154 points higher on the wake from the Goldman Sachs reports yesterday of almost $3.5 billion increase in revenue and profits for the second quarter. The S&P 500 is up 16 and the NASDAQ up 33. You can see it in the top right-hand corner. What we're going to do is focus on an ETF that's mainly ignored simply because the media doesn't cover it. So many investors don't even know it exists. If they do know it exists, they don't know how to work it or use it. Well, I'm going to recommend that you start learning rather quickly because there is an opportunity in the PowerShares DB Agricultural ETF. I've already drawn some lines here that I'm going to get to in a moment, but I want to focus on attention when you're through listening to this to go to my blog at Market Traders University. It's in the education section. All you have to do is click it, education, and then go to Trader Blogs and find commodities, and you'll read the blog. Back last Friday, I wrote a blog concerning the idea that the value of the ETF was at the right price or right value, price play, to look and examine a purchase. Well, over the weekend, the weather did not cooperate. Things looks like it's getting a little dry out there in the Midwest, and the USDA had come out with their crop development report yesterday that pretty much shocked the market. Market wasn't ready for its disclosure that both soybeans and corn are 50%, roughly 50% below its developmental stages for this time of year. This is the time where there's fertilization. This is the time for germination. This is the time for flowering of soybeans, germination for corn. And if it doesn't come out quite right, then what happens is the traders and investors and the farmers start hedging against price volatility, and volume starts coming into the market. And that's exactly what's happening now. USDA has shocked the market with the report that germination and flowering in both corn and soybeans respectively are way behind normal. What does that mean? It simply means less yield off the acres planted. How much less yield? Nobody knows, because there's 3 more stages of development that these crops have to go through. But one thing for certain, it creates more questions than answers going forward. So here we have the market, while it has climbed over a 2.5, 3 month period, did a very nice job, made some money for people that went long. In half the time, it decreased, setting the stage for this last USDA report that was announced yesterday. It was very meaningful because obviously what's happened is in the last 3-4 trading sessions, the market stopped going down. It then put in what's called a morning star formation in candlesticks. And I talk more about that in my blogs on Market Traders University. But nonetheless, this downtrend, as of today, was violated. If you take a look, this downtrend also follows, or the market has followed, this purple line, which happens to be the 10-day exponential moving average. Well, the market today is above that trend line. If you take a look right here in the DBA, which I'll get to, you have a 24.82 reading, that's up 41 cents, and the moving average came in at yesterday's lows of 24.40 roughly. So what I did with that violation above this trend line is I went and bought 600 shares of DB Agricultural ETF. We're going to follow this trade throughout the season, and I'm going to give you analysis on it. So I'm hoping that you'll find yourself a way of following me on Market Traders University. Remember, there's risks associated with purchasing anything that this is active, so know that you must be using a percentage of your own investment capital, not all of it. You can quickly lose as quickly as gain. It's my obligation to give you that disclosure so you know that this is just not a one-way street. But if you like a value play, here is a good value play. Just make sure that if you buy this ETF, and I'll be putting in a stop later, the stop goes below this low of approximately 23.40. So with that, every week I'll be following this ETF now that we've broken above the channel. Currently, I'm unchanged. That's a great place to end this video. So thanks very much. And remember, go back to Market Traders University, the education section, to the Traders blog, and read the last blog I did on this ETF. I think you'll find that there is some meaningful stuff in there along with the rest of the site. So once again, the site's free. Thanks very much for your interest in watching, if you have, and I'll be speaking with you later. Have yourself a great day, and may the trades be yours.